it's Gail with Traders Help Desk, and in this video I just wanted to go over the results from the Forex binary options for November. I'm doing them on a monthly basis now just so I can do them all at one time, and you can see how the month performed overall. So we're going to start with the week ending November 2nd. We actually had a total of 38 profitable trades and 14 losing trades, and that is a 73.08% profitable percentage. Now, you will notice that on that Friday we only had one signal. I am running the signals at different times. So if I don't think that we're going to have, a really good day or the market's moving too slow, then I may opt not to run the signals. So you can see on that Friday, the signals only produced one on the Aussie, one on the USD JPY. Now, on the week ending November 9th, we had a 65.91% profitable percentage. We had 29 profitable trades and 15 losses. And again, you can see that some nights we had no trades. Like Wednesday during the Asian session, we had none. And during the London session, we only had 2 losing trades. Then for the week ending November 16th, we had a 54.76 profitable percentage. It did not do as well this week, but that happens when you're trading. Every week is not going to be a profitable week. Now, depending on how you traded this, you could have been profitable, but most of that was, it would have to expire in the money on all of these 23 trades for you to have made money that week. Then on November 23rd, you can see we did not have the signals Wednesday, Thursday, or Friday. We had an 80% profitable percentage, 16 winning trades, 4 losing trades. Then for the week ending November 30th, we had 35 profitable trades, 17 losing trades, and 67.31% profitable for the week. And again, you can see some nights we did not have any trades. And again, you're not going to have trades every day, but I am trying to cull it down to when the market is moving. Now, for the totals, and this is since the binary options have started running, you can see we've had 1,332 winning trades, 803 losing trades. Total trades is 2,135, and the overall percentage is 62.39. Now, I want you to pay attention to that number because we're going to look at some different scenarios using this method, okay? Give me just a minute. Okay, now this is with a simulator I've used, and if you watch my other videos, I use it quite often. And in this scenario, if you are 61.5% profitable and your minimum risk is 45, your maximum risk is 45, and you're actually able to capture 0.8 on your risk to reward ratio, then this highlights what your equity graph could potentially look like. Now, this does do a total of 600 trades, okay? So initially, you're pretty much underwater right here. Then you really go underwater here, but then you go on to make money. Of course, during this entire time right here is when traders typically drop off. In other words, this one took just about 270 trades before it really became profitable, okay? Well, most traders won't stay with a strategy that long. Does not mean it's a bad strategy. It just means they don't have enough discipline to stay with it, even though it's going through a negative drawdown. And that's what that is. Now, if you look here, it tells you your drawdown, the largest drawdown, is $664. And that would be this point right here. That's the most you lost. And then the probabilities changed for you and you went on to make money. Okay? Now, this is when most traders, especially new traders, buy here. They're out looking for something else. Again, there's nothing magical in trading, okay? It's the discipline and the ability to stay with it even though it's in a drawdown. Instead, most traders actually just go out and, try to find the next magical method, which, again, there's not one. Okay? Now remember, this is at 61.5%. Okay? Here's another one at 61.83. Now that's only a 0.3 difference, okay? And I want to make sure y'all understand that. This is 61.83. This one is 61.5. Look at this equity graph. Now come over and look at this equity graph. Totally different, okay? You still go through the drawdown, but your drawdown is right here at probably about midway through your trading. Again, this is what happens. Okay, look at your largest drawdown, $508. Now, nothing's changed on this except that 61.83 instead of 61.5. Okay, so you only got 0.3 better on this equity graph than you did on the previous one. The only difference is that your drawdown actually occurred midway through. Now, if you zoom in even more on this, this is about 233. This is about 323. So that's about 100 trades right there. And they were all pretty much losers, okay? So this represents 100 losing trades right here, right in the middle, okay? This is when, if you were trading from here to probably about here, oh, well, you've lost the advantage. No, it's going through a drawdown. That's what we refer to as a drawdown. It's when, you're trading the same thing. It just starts losing money. You have to sit through it, and then it begins making money again. Now, another common misconception is, oh, this will only work on binary options. No, it won't. Because I used risk to reward, to me, risk to reward is your magical ingredient in trading. Okay? The only difference is if I was doing this on Forex, okay, I would be using a 1.5, okay? This is my edge. And I've said this repeatedly in my videos. This is my edge, okay? So in this case, you're risking 5 ticks to make 10 ticks, okay? Now, on this one, your profitable percentage is 60.33, okay? So it's lower than the 2 previous ones, but we have increased the risk to reward ratio. And as you can see, it never really goes through that substantial drawdown. Why? Because we have increased our edge. We went from 0.8 to 1.5, okay? So if you're thinking about, oh, I need an edge, well, it's right there for you to take. It's called risk to reward, and if you know how to use it, you know that's your biggest edge. It's not your indicators. It's not anything else that you have on your chart. It's how you are trading that chart. Are you able to get 1.5? Now, the thing of it is, if you're trading Forex, some days you might get 1 to 3, 1 to 4, okay? Other days, you'll probably get that 1 to 0.8 because the market's not moving and you opt to just go ahead and take your profits, which, hey, you're a trader, that's your job, okay? But at the end of the month, if you figure up your risk to reward ratio, is it, 1 to 1.5? So for every dollar you're risking, you're making $1.50. Now, you can do that with binaries as well, okay? But what changes if you're doing that is the risk, okay? Here you can see that the minimum risk is 45, the maximum risk is 45. Well, if you limited that to, let's say, 35 or 30 and actually only traded when the market was moving, and I'm working on an indicator now that will actually show you that, okay? And if you're able to only trade during those periods and you can get your edge up to, let's say, 9.9 or 1.1, then you can even have a better equity graph if you're trading the binary options. Again, it all comes down to knowing which numbers work for you. In my edge, I've said it before and I'll say it again, my edge comes from risk to reward ratio. That's my biggest edge. So once you can really understand this and implement risk to reward, then you'll probably see that your trading does improve.